Well, I'm going to share this article with you from Silver Doctors. It's from Ted Butler. This guy's been in the trenches, so to speak, a long time, fighting the silver fight with the best of us. I don't know necessarily that this is actually going to be the truth. He seems to think so, and maybe he's right, but I've seen a lot of times in the past where we thought silver was about to break out because of XYZ, and it just didn't. But he says there's 7 big COMEX shorts, or the 7 big COMEX shorts, dead men walking, according to Ted Butler. Now, I'd love nothing more than that to happen to be actually true. These short positions, these commercials, get them out of here. Boom. Blow up in their face, the positions they have, and then metals skyrocket. I'd love nothing more. Remember how I was just telling you, this Google, YouTube protest thing where the big advertisers are protesting Google and basically YouTube. We don't want to give you advertising money, for our advertisements because we don't know where our video ads are being played, if it's extremist content, if it's hate speech, if it's whatever, violence, we don't want it. And Google responded, yeah, we're working on it, give us till Sunday, and we should be good to go. And then, of course, my video earlier yesterday, like 2:30 in the afternoon, I said, look, Eastern time, I said, pretty much, mark my words, this little boycott will be over before we know it. Because those advertisers need money. And the only way they get more money in is by advertising and putting those ads in front of your face. I think this was more political to basically say we don't want to be on the far right or alt-right people's channels and things like that. Any points of view we don't like, get rid of, we need more control. That's personally what I think, but I don't know to be certain. That's just my opinion. But I was telling you how I was getting these emails from YouTube. This video is no longer monetized. This one's no longer allowed to be monetized. These are older ones, years old, ISIS or something or another, terror attack, just something I was talking about. And I'm like, I see their terms and conditions, which they've changed in recent times, but okay, I'm not going to fight. I'm not going to check the box that says, I think you made an error in, demonetizing my video. Nope, let it go. And matter of fact, I'm erasing them. They're so old. So I got one very recently, and it said, hi, JSnip4, your video such and such. It's actually called Realist News, Global Debt Binge Changing the Nature of Life in the U.S. I think it was very recent, as a matter of fact. March 20th. March 20th. So I'm like, I don't think so. I watched my video. What in the hell is here in this that would not allow it to be monetized? There's nothing about, terror talk and hoax or shootings and killings or hate speech or, what I mean? Like, check the box. You need to review this one. Thanks. Send. Reply right back today. Hi, JSnip4. After reviewing your review, we determined that the content in your video and video details are advertiser friendly. As a result, your video can be monetized. But you demonetized it until I said something. Do I get a bonus? Do I get some bonus payback because that's been gone for a couple days? Absolutely not. Nope. JSnip4, sorry about your luck. You're going to have to fight this one. Fight it, check the box, submit, wait, turnaround time, which was pretty quick. YouTube, very quick time, thanks. But how much money could the video have made with the advertisements in the couple of days it was disabled, right? Not even a fight I'm willing to have, whatever. It's not very often that I have to deal with that. There's only been a few times, literally a few times, where I had to check that stupid box. This is not against your terms and, violation of ad-friendly stuff. Please check this out again. Yep, every single time I've checked that box, which is a handful, 4 or 5 times total maybe. Yes, you're right. You can be monetized again. So it could be some flunky at YouTube, or we're not really sure, And especially with this advertiser uproar thing, boycott, I'm sure they're fine-tooth comb and a magnifying glass. Let's make sure we don't upset the advertisers. That's right, because why? That hurts your pocketbook. So having said all that, want to talk again about this video from Silver Doctor. 7 big comic shorts, meaning short positions, those that don't know the lingo. Dead men walking, says Ted Butler. These 7 big COMEX shorts are dead men walking. Their financial fates are sealed, with only the timing to be determined. From Ted Butler. The narrative thus far, after decades of allowing themselves to be led in and out of COMEX silver futures contracts by their commercial counterparts, several managed money traders appear to have woken up to the fact that they've been duped all along. A key component of the silver manipulation for the past 30 years has been the knee-jerk and mechanical reaction of the managed money traders to collectively sell whenever the commercials rigged prices lower beyond certain moving averages. Ditto for buying on rising prices. The dependability of the managed money technical funds to obey commercially rigged price signals made the funds the true enablers of the manipulation. So keep in mind, when he's talking about the commercials and these other groups, these managed money funds, there's usually, if you look at the COT report, Commitment of Traders report, it's released once a week for like the previous week to let you know what's happening, short positions, long positions, gold and silver. And there's different groups, like there's the commercials, there's, I forget what the other status is, but that's what he's talking about, the managed money. And then there's like you and I, nobody, the nonsense. And the 2 biggest holders of all these contracts are the commercials, and then that second category, we're going to call it managed money. I forget what the actual term is. But he's saying normally when the commercials would short and then dump all their contracts and push the price down, the managed money with their contracts sell off, take a beating, and okay, let's try again later. What he's suggesting, I believe, in this entire article is that they're no longer retreating and sell off. Oh, they sold off, let's sell off. Nope, we're going to hold on to this. That's, I think, what he's talking about now. The dependability of the managed money technical funds to obey commercially rigged price signals made the funds the true enablers of the manipulation. The commercials, mostly domestic and foreign banks, made their profits by getting the technical funds to buy high and sell low. Without the technical funds to maneuver at will, the commercials would have little reason to prolong the silver manipulation. So obvious has it become, the continued whipsawing of the managed money traders by the commercials, that a near universal question emerged. Why are these technical funds engaging in such a bizarre and harmful to their investors game? I've heard from more than one reader that there must be some kind of collusion between the technical funds and the commercials. Now, that's what I feel like, honestly. Featuring under-the-table payments to the technical funds by the commercials to continue deliberately losing. While I understand and emphasize with the logic of such an explanation, given the nearly inexplicable behavior of the technical funds, I don't see such collusion, as I've tried to explain over the years. I certainly see collusion, just not on the part of managed money traders to deliberately lose. Nowhere is the price influence of the continuing contest between the managed money traders and the commercials more pronounced than it is in COMEX silver. That's what led me to conclude the price of silver was manipulated more than 30 years ago. And while it is now true that this same price influence has come to infect just about all of our markets, silver still maintains a unique role as being the most manipulated market of all. Not just because it was the first such market to be manipulated by futures positioning, but that has something to do with it. Being first means that silver has been manipulated in this manner for far longer than any other market, and as such, its price is necessarily more artificial. More to the point is that the objective relative measures involving actual production and consumption and real-world supplies always feature silver at a much different level than any other commodity. So extreme has become the size of the derivatives trade in silver compared to actual metal in the world, and the fact that it has lasted so long, decades, that perhaps it's no great surprise that if the managed money traders were ever going to wake up to the realization that they were being gamed, then they would likely first see it in silver. Should the managed money traders come to such a realization and radically alter their behavior, then there should be strong signs indicating such a change. Those strong signs abound and have been discussed on these pages. First came the start of a buildup in core, non-technical fund managed money, long positions in COMEX silver. Again, long position means they're betting that the price is going to go up. A short position means they're betting that the price is going to go down. Okay? So, From the time the COT data started tracking managed money traders around, hold on. First came the start of a build-up in core. Hold on. All right, let me start back a second. Should the managed money traders come to such a realization and radically alter their behavior, then there should be strong signs indicating such a change. Those strong signs abound and have been discussed on these pages. First came the start of a buildup in core non-technical fund managed money long positions in COMEX silver starting around 3 years ago. I define these positions as not being governed by price change, meaning such longs are not sold on price sell-offs and therefore are not technical in nature. In simple terms, the core long position is the amount of long positions remaining after significant price declines. From the time the COT data started tracking managed money traders around 2009 until the fall of 2013, the long position of managed money traders in COMEX silver rarely fell below the 20,000 contract level at the depths of price declines. Again, that's remaining long in the managed money category at the end of significant silver price declines is the core non-technical fund long position. But starting in 2014, the core non-technical fund managed money long position began a years-long climb, first to 30,000 contracts, then 40,000 contracts, and finally this past December to nearly 60,000 contracts. Honestly, 56,000 as of December 6th. This meant many more managed money longs remained long after the sell-offs. Then, on the $3 rally early this year, some 40,000 new managed money longs were added, as technical funds joined with their non-technical fund fellow managed money traders on the long side of COMEX silver futures, creating a combined managed money long position of 96,000 contracts on February 28th. Part of me wants to apologize for throwing so many numbers at you, but I'm talking about the only numbers that matter. Every 10,000 contracts of COMEX silver is equal to 50 million ounces of metal. And let me do the math. Make sure 50,000. 50,000. Oh, 10,000. 5,000 times 10,000. Well, Snip, you could have just added the zeros. 50 million. Thank you. So every 10,000 contracts, because each contract is worth 5,000 ounces. Okay, so 5,000 times 10,000, add the two zeros, whatever, 50 million. So every 10,000 contracts of COMEX silver is equal to 50 million ounces of metal. So I am talking about the many hundreds of millions of ounces that is setting the price of silver. So please bear with me, but certainly feel free to question me about any of this. On the sharp $1.50 sell-off through the last COT report, some 16,000 managed money long positions were sold, presumably by technical funds, leaving over 80,000 contracts long in the managed money category. Prices moved higher since then, so there is little reason to suspect that the long position is lower as of yesterday's cutoff date. If silver prices don't get pushed below the recent lows of $16.75, then by my definition, the core non-technical fund long position in COMEX silver appears to be 80,000 contracts or roughly 400 million ounces until proven otherwise. That is 4 times the 20,000 contract or 100 million ounces core long position that existed prior to late 2013. Not only is this a shocking and monumental increase in core long positions, I must remind you that it is unique to COMEX silver, and this pattern of an exploding core non-technical managed money long position exists in no other market, gold included. Moreover, the stunning size of the core managed money long position in silver is also accompanied by at least another 30,000 contract core non-technical fund long position held by traders not in the managed money category. The bottom line, as I've indicated recently, is that there exists at least 110,000 contracts, which is 550 million ounces, of a core paper long position in COMEX silver futures not likely to be sold, should silver prices get rigged lower. Also, as I've indicated previously, if this core long position is not about to be sold to the downside, as I believe, then it will only be sold to the upside. So here we have 550 million ounces of paper silver held by a fairly diverse number of traders seemingly intent on holding until they can sell at what they conclude is a sufficiently high enough price. Because this huge core long silver position is held in paper contract or derivative form, there must be an equally huge corresponding short position. Thanks to exquisitely detailed government data in the form of COT and bank participation reports, we can pinpoint the huge short position in COMEX silver with even greater position than the long side. That's because as large as the short position is in COMEX silver, it is held by far fewer traders than exist on the long side. Because the traders which hold the huge short position in COMEX silver are so very few in number, serious issues related to market concentration, position limits, and collusion are raised, none of which I'll go into today. This issue today is that the core long position in COMEX silver is held by a diverse number of traders into the hundreds, while nearly all of the short positions is held by just 8 big commercial shorts. In last week's COT report, these 8 large traders held essentially the entire 98,000 contract, 490 million ounces, total commercial net short position. One of those 8 traders, JP Morgan, held around 27,000 contracts short, leaving the remaining 7 traders net short more than 70,000 contracts. For the sake of brevity, let me quickly conclude that because the crooks and scoundrels at JP Morgan saw the need and wisdom to accumulate that many hundreds of millions of ounces of physical silver that they did acquire over the past 6 years, JP Morgan must be removed from any calculation of loss due to higher silver prices. The problem is that none of the crooks and scoundrels at the 7 remaining big commercial shorts can be removed from such calculations because none bought actual silver. As such, I can't help but think of these 7 big COMEX shorts as dead men walking, their financial fates sealed, and with only the timing to be determined. There are several forces that seal the fate of the big 7 COMEX silver shorts. 1, the unquestioned and documented buildup of core long positions, not about to be resolved by lower prices. 2, JP Morgan exiting the dead man fold by virtue of snatching up every available ounce of actual silver for 6 years. And 3, the growing awareness of the Big Seven's predicament, including lawsuits hitting closer to home. Incredibly, these are self-reinforcing factors. For example, sensing the fate of the doomed 7 could and should have encouraged even larger managed money core long positions. Further, we know that the Big 7 COMEX silver shorts are mostly foreign banks speculating their butts off on the short side of silver and are not legitimately hedging in any way, just taking the other side of a speculative derivatives bet, because there is no legitimate basis for why a Bank of Nova Scotia, for instance, would maintain a massive short position in COMEX silver. Then by definition, the basis for being short must be illegitimate. There is no way anyone can construct a legitimate economic motive behind the 7 big shorts' massive and concentrated short position in COMEX silver. Otherwise, I would have heard it long ago. And not for a moment am I exempting JP Morgan in the legitimacy department, just in the 7 dead men's fate. What makes the 7 big traders dead men walking is that they can no longer resolve their fate profitably. It took years to create this very unique situation, but basically they are trapped. There are only 2 ways for any short to get covered: by actual delivery or by buying back the short position. How the heck are the 7 big COMEX silver shorts going to secure 350 million ounces of physical silver in a hurry, with which to deliver against and close out their huge short position, when JP Morgan has put a stranglehold on physical silver? Look at the current March silver delivery process. JP Morgan has taken nearly all of the 15 million ounces delivered this month. Any attempt by the Big 7 to buy physical silver in any reasonable quantity will send the price soaring and financially cripple these traders. Likewise, any attempt to buy back big quantities of COMEX paper futures contracts would also send prices soaring for the same reason the Big Seven, along with JP Morgan, have been the sole sellers up until now. How can the former big short sellers simply turn around and begin to buy in earnest without causing prices to explode? In simple terms, they can't. Sure, they can buy on lower prices as long as the core longs are willing to sell, but that's the whole point. The evidence strongly suggests that the core longs won't sell on lower prices. This is what's known as being between a rock and a hard place. Of course, I can't give you the exact timeline and sequence of events if I tried to. You should reject that if you tried to. No one can see the future with such clarity. I can't tell you if the crooks at JP Morgan might not still continue to aid the 7 soon-to-be dead men by adding shorts for a while longer, but I don't see JP Morgan bailing them out completely by donating the bank's acquired physical silver of the last 6 years at low prices. My firm sense about JP Morgan and how they behave typically is that they would sooner rip your lungs out than look at you if there was a decent buck in it for them. Even if JP Morgan temporarily prolongs the silver manipulation, as they are certainly capable of doing, that will only offer a brief stay of execution for the 7 Walking Dead. What I can tell you is that when the time is up for the Walking Dead, it will be a time like no other in the history of silver. Prices can and will continue to muddle along as long as the 7 big shorts and JP Morgan continue to cap price rallies. But the moment the capping ends, either at the hands of JP Morgan or the Walking Dead, the silver price landscape will be changed forever. None of us, myself included, will be able to fully comprehend the upcoming shock to the upside. This has little to do with price per se, just the mechanics of the market, but it will seem most vividly in price. It'll be seen most vividly in price when the big shorts start to buy back their shorts to the upside. The world of silver will have changed. My one question would be, what's stopping these criminals from just adding more paper? Because I thought a year or two ago, when gold was up, well, both golds were up a bit, we saw the 100 to 1 ratio of gold, paper to real physical, 200 to 1, 300 to 1, 400 to 1, is up to like 500 to 1 or something, 400 or 500 to 1, when we did the math of how many paper positions are out there versus, what's in the vaults of the COMEX based off the COT report, not in the COMEX, but in Scotia and the other banks. So that would be my question, whether they have to go find silver or not. Can't they just print more paper contracts and flood the market, is all I'm saying. I don't know. Ted Butler is a tiny bit more in on this stuff than Jason Snip4. Actually, a lot more. I'm just kidding. This guy's been around the markets since forever, since before I even knew about silver, touched silver, wanted to buy silver. This guy was already all over it. So I do take what he says, not with a grain of salt. I take what he says as, he knows what he's talking about. But again, I look back at November of 2014, the CME group added the new rule for circuit breakers being triggered for only gold and silver should they move too fast in a certain amount of time. And as I've said numerous times about that, they would never have done that to protect you in case the price goes down too fast. Because it goes up and down, it doesn't matter. Those things can trigger one way or the other, the circuit breakers. And I told you, and I've always told you, they only put that in place so that when the price does explode higher uncontrollably, they'll have control. Circuit breakers can't trade for 2 minutes or whatever, Okay, breakers tripped, so to speak. All right, trade again. Goes crazy. Circuit breakers tripped again 4 times in a day. After the 4th time, supposedly, they can move wherever they need to move, the prices. And I'll end this by telling you the Webbot has said over and over and over and over, you will see $5 per day moves in silver when this stuff starts happening, followed by $20 moves in silver alone. You can't have a $20 move when silver is $18. You know what I mean? We're talking explosive, out of control, circuit breakers triggering, that kind of thing. So, you'll know when it happens because you'll be seeing me screaming, breaking news, whatever time of day it is that this happens. I'll be running out to my car to do a video or whatever the hell I have to do. Breaking, if you haven't already seen, silver just jumped, $16 or something. But I still believe we're ways away from that. But worthy article, worthy information from Ted Butler. Take care.